99% of people don't understand how money works. They don't understand how our economic system works, and they don't understand how to get money. If you want to be part of that financial 1%, you don't have to be born with $1 million in your lap, but you have to know what the 1% knows. This is something that I wish school would have taught me because it would have saved me years of time, but the way that our system works for the majority of people is you go to school, you get a job, and then you work at this job and you spend money, and that's it. But our economic system has three different components to it. We have the economy, we have investors, and then we have consumers. The economy is primarily businesses, the companies and businesses that make up our economy and our economic system. Then we have investors. These are people who own this economic system and this economy. And then we have the consumers. This is everybody, regular people, middle class people, poor people, rich people. Everybody is a consumer because everybody spends money, and consumers are what fuel the economy. Now this is where things get interesting, because on one hand, you have the government and the Federal Reserve Bank talking about how strong our economy is. What does it take for our economy to be strong? That means consumers have to spend more money. The more money people spend, the stronger that our economy is. Now when our economy is booming, that benefits investors. However, when our economy is hurting, that also benefits investors. Because when our economy is hurting, that means now investors can come in and buy a piece of the economy at a discounted price. You can buy assets at a discounted price. Now remember, when consumers spend all their money, that benefits the economy. When consumers go into debt to spend their money, they benefit the economy. When consumers are broke because they've spent all their money, that's good for the economy. That also benefits the investor. However, when consumers save money, when consumers are using the money to build their own wealth, that hurts the economy. Kind of an interesting system. And now we have the government and the Federal Reserve Bank who are doing everything that they can to boost the economy. The simplest example that I can give you of this was when during the 2020 pandemic, you saw the government send out the stimulus checks. These stimulus checks were not meant to stimulate consumers, although that's what many people thought. They were sent to stimulate the economy. However, in order to stimulate the economy, they gave this money to consumers. So now regular people got free money, and what did they do? They went to Amazon, they went to Walmart, they went to Kroger, some went to Lululemon, some went to Gucci, some went to Apple, but they spent money. When you spend money, that benefits the economy. Once you understand that, then you can understand that our economic system is designed to benefit not the consumer, but it's designed to benefit the economy and the investor. For one, if you are a business owner or an investor, you are benefited with lower tax rates and more deductions. The people that pay the highest tax rates in America are people who just work a job because your ordinary income, the money you make from your job, your salary, that's taxed at the highest tax rates, and that also comes with the lowest deductions and the lowest write-offs. I'm telling you this as an attorney who's not your attorney. The second part is a little less obvious because on the side of this economic system, we have other entities. And this is the government and the Federal Reserve Bank. And these entities are kind of overseeing this entire system. And the way these entities work is that they want to grow this. They want to grow the economy. Now remember, who benefits when you have a growing economy? The investor benefits. Who pays to grow the economy? Consumers pay. Now, how does the government and the Federal Reserve Bank work to grow the economy in order to continue growing our economic system? Well, this is through something called inflation. We've been talking about this a lot, especially in the last couple of years, but inflation has been happening way before 2020. The Federal Reserve Bank openly talks about today how they want a 2% target inflation. Now, of course, today we're at much higher inflation levels than 2%, but they say that they want 2% inflation. What does that mean? And why not 0% inflation? 2% inflation means that the government and the Federal Reserve Bank are working to increase the amount of money out there. When you increase the amount of money out there, you increase the amount of dollars, but you decrease the buying power of each individual dollar. Because when you print more money without producing more wealth, the buying power of each individual dollar goes down, which causes the price of things to go up. So now when the Federal Reserve Bank says that we want 2% inflation, that means that they want to have just enough inflation that the majority of people don't even see it happen. Because prior to 2020, the majority of people didn't even understand what inflation was. The majority of people had no idea that inflation was even happening. However, inflation is a hidden tax. And the person who pays the price of inflation is the person who doesn't understand what inflation is, because that means that your savings are being eroded. The buying power of your salary is going away. That's why today you keep hearing about how the cost of living is growing faster than wages. The reason why your cost of living is growing faster than wages is because of inflation. Inflation disproportionately hurts the poor and the financially uneducated, and disproportionately benefits the financially educated. How? Because now when you increase the amount of dollars out there, you increase how much money consumers can spend. Now remember, consumers are everybody. Poor people, middle class, and the rich. Everybody is a consumer. However, for the majority of people who are not financially educated, you're spending more than you're putting towards your wealth. You're spending more than you're saving, or you're spending all of your money. And so now when you increase the amount of dollars out there, consumers have more money to spend into the economy. When you have more money to spend into the economy, our economy can grow. And if our economy is growing, that means that investors are making money. And if the economy is growing, that means the business owners are making money. But who's paying the price? It's the consumer. Every single person is a born consumer. Most people cannot be a business owner or start a company, or should start or operate a company, because it's very hard, it's very risky, and most people don't want to do that. However, everybody can be an investor. This is how you can benefit from the economic system, because the economic system is designed to benefit the economy, which also benefits the investor. How do you do that? Well, now you as a consumer have to take some of your money, and instead of trying to grow the economy, you take this money and you put it here instead. Sorry about the arrow. You put it into this investing pile, because now when you own the investments, you own a piece of the economy without having to operate the economy. And then when the economy grows, whether it's because the economy is producing more value, or it's because of more inflation being created by the Federal Reserve Bank, or it's because the government is spending more money, which creates more inflation, all of these things benefit the economy, which then trickle down to the investor. But the person who has to pay the price is the consumer. This is why your job now as a financially educated person is to understand this economic system, and then shift your mindset from just the consumer to the investor. Now, how do you do that? Well, for number one, you have to be financially educated. And number two, you have to understand what's actually happening in the world. That way you can make smarter decisions with your money. If you're looking for an easy way to do that, you can join something like Market Briefs, which is my free financial newsletter, which I created to help people, one, understand what's happening in the markets, two, save time, because you can read Market Briefs in less than 5 minutes every morning, and three, avoid all the sensationalism, because we all know that the traditional media loves clickbaity headlines. They love the sensationalism, and we don't have any of that in Market Briefs because, well, it's just one email. Once you open the email, all the news stories that you need to know as an investor are right there. It's completely free, and you can read it in less than 5 minutes every morning. So if you haven't joined Market Briefs yet, I'll put the link to how you can join for free down in the description below. We've been seeing inflation happen for decades and decades and decades. However, the reason why you keep hearing the Federal Reserve Bank talk about a 2% inflation target is because this 2% inflation is just enough to continue growing this economic system without alerting consumers. Because if regular people are seeing inflation in their day-to-day lives, well, then that's too much inflation, because then people start to get worried. They start to question the system. They start to change their spending habits. And so that's why the Fed wants to have just enough inflation that the majority of people don't even notice it. And that's why the majority of people continue paying this hidden tax, which is inflation, because it's a price that you pay. And that price is now that your savings don't stretch as far, that your salary doesn't stretch as far. And this is why the majority of people don't even notice it happen. And this is why we've been seeing a growing divide between the rich and the poor. Because the rich, the financially educated, understand this, and they continue benefiting from this economic system. The financially uneducated and the poor don't see this happening, and now you keep seeing, oh yeah, you got a salary raise, you got a raise. But your raise isn't keeping up with the higher cost of living, which means now you're effectively poorer than you were before, not because you got a raise, but because of the inflation that's been out of your control. This is why, while the majority of people are complaining about how the system works, I want you to get educated. That way you can learn the rules to the game. That way you can actually benefit from the way that this system works, because the reality is you don't need $1 million to start. You don't even need $1,000 to start. You can start benefiting from the system with as little as $100, and then you can slowly keep compounding your wealth. That way you can win in this economic system as well. But the first thing that you need if you want to win is you got to have the right financial education, and then you got to be willing to do it. Risk versus reward. Higher up here, you have much less risk. Down here, much higher risk. Down here, much higher reward. Up here, much lower reward. I don't recommend anybody take their hard-earned money and try to double it in the casino as a financial